Today's our guest is Omni Casey from New Leaf Developers. Welcome, Omni.
Thank you, Rama. Happy to be here.
Sure, absolutely. Likewise. Little bit about Omni. Omni has been a real estate investor, broker, and coach for nearly 20 years. His real estate career started in Hawaii, where he grew up. Over the last 10 plus years, he and his family have lived in Northern Virginia and have been very active in both growing their real estate investment portfolio and growing a top performing real estate team and office in Loudoun County, Virginia. With a passion for building wealth and helping others achieve financial freedom, Amna has coached hundreds of real estate investors, real estate agents, and clients like to create and execute a plan to grow their real estate business, grow their investment portfolio, or both. As a leader of very large real estate team, Omni main focus and goal is to help every team member achieve financial freedom through real estate investing. Over the years, he has adapted his roles, moving away from a traditional broker role and now plays the roles of financial freedom coach, dream advocate, and legacy building strategist. So, with that, Omni, you want to add anything to your background?
That is way too long of an intro. Sorry about that. My publisher put that out a while ago, and I think we
Yeah.
gotta condense that. But yeah, I think that sums it up. I've been doing this for quite some time, and I've been both on the agent broker side. Started as a real estate investor, and that's my passion. But as we the book that we put out kind of tells my story of achieving that financial freedom at a young age. A very simple process, step by step process to get there. And we believe in buying and holding real estate, right? Buying and holding real estate that makes sense to buy and hold, not for particularly just for appreciation value, but really the cash flow value there. And it kind of tells my story and lots of different options. And then it talks about being able to shift and look at that legacy and that financial generational wealth after you achieve your financial freedom. So that's what I do with the majority of my time. But yeah, I have three kids as well, and they're my wife and myself. So we talk about that New Leaf Redevelopment company. It's a family company. It's me, my wife, and my oldest son is 13. My daughter is our mini CEO. She's 9, and my youngest son is 7. So really, it's all about not just the financial side of things, but building that legacy of knowledge for my family and the community as well.
Awesome, awesome. So, would you share a little bit more about how exactly you achieved financial freedom? And that's what you discussed in the book, also, right? So, would you elaborate a little bit on that?
Sure, sure. Yeah. So my story, I grew up in Hawaii, born and raised in Hawaii. All my family's still there, and I've done a bunch of things. I was a entrepreneur, business owner on multiple levels, and so I love business. And then at some point, I realized real estate was a really cool business option for me, and I shifted into real estate investing. Found a tribe, found a mentor, got into masterminds and coaches, and really surrounded myself and tried to give myself the best opportunity to succeed as an investor. Along the way, I got my license as a real estate agent as well, not with the goal of becoming a real estate agent, but really thought that was a way for me to, remove a barrier of knowledge that I didn't really have. What's happening on that side? After getting my license, I realized that being a real estate agent and or broker was a really really cool business as well. And so I kind of ran both of those parallel. Being a real estate investor, ran that business, and being a real estate agent, ran that business parallel. One of those was active income, the real estate invest agent side, and that helped fund the purchases on the investment side. Started out with one rental property a year to 2 to 5. Last year we purchased 46 properties, which was one of our highest years ever. Is a goal to purchase one property per week. We didn't quite hit our goal, but we're always trying to push ourselves to that next level of stacking up passive income. And in the book, I talk about focusing on financial freedom at a basic level, a very basic level. So when I started out from investing, I'm like, I want to be an investor. I want to, achieve this big goal. I want to, thinking about that legacy and generational wealth before I was even financially free. And that kind of muddled view, I call it, led me to be not focused at all on my direction in life and in real estate. It wasn't until my mentor helped me realize that financial freedom, that path and the investment plan for financial freedom is different than the path for generational wealth. different than the past for leaving a legacy. And so that allowed me to focus 100% for just a few years on financial freedom, passive income. And once I achieved that, then I was able to shift and diversify into other types of investments, maybe higher risk, higher reward investments. But doing that prior to being financially free was just too risky, on that level. So that sets the stage for doing things in life that you enjoy. So I still work. I love working. I like I do a lot of things. I'm an author. I run a brokerage. I run a syndication, and I work very hard, but not because I have to. It's because it's a passion. And so I got to choose to do those things, regardless of whether they were financially rewarding. Because my rental properties pay for our income, our rental properties pay for our expenses and bills. And from what I've found is, when you don't need to worry about money and that's not your focus, you can actually make a lot of money doing that. So it's not like I'm spending all my time just on charity and things like that, and definitely involved in that, but it is big projects. And I'm sure we'll talk about this towards the end, like the syndication I'm working on, a big project that for years nothing can't come from that. But the fact that I was able to put the time in and not worry about the active income necessity is probably going to turn into the biggest investment of my life, paying off, because I was able to commit all that unpaid hours to make it happen.
Awesome, awesome, and thank you. So, and you mentioned you closed 46 properties last year. So, would you share like how you're sourcing those deals and what is your strategy there?
Sure. So I think my entire existence is symbiotic in terms of me being in the real estate investor space and in the brokerage space. So now I'm in Northern Virginia. I'm in Ashburn, and I run about 100 agent office. It's a fairly large office, and for the last few years, I've been training nothing but real estate investing. And so the agents that I have are real estate investors, and they're focused on real estate investing. And then we also run a real estate investor education, a free education event for the community and meetup. We have about 100 people that show up every single time we do that. And so those communities feed into each other. It's obviously business, back and forth for agents. Agents help investors. But I always make sure that I'm looking for something just a little bit different than everyone else. And I tell everyone what I'm looking for. And usually, in terms of reciprocity, I provide free education. They usually want to try to help me find a deal. So a lot of it comes from my agents or my investor meetup community. And over the last few years, my focus has not been on buying one property. It has been buying a focus on buying portfolios, small to mid-sized portfolios from landlords. So if you look at a landlord who's been a landlord for the last 10, 15, maybe 20 years, and they're getting tired, maybe they're looking to retire, they probably might manage it themselves or be somewhat more involved than a typical landlord should be at that level. When they're looking to sell off their properties, it's hard to sell an entire portfolio. They usually got to sell it one at a time, because there's not many buyers that want to buy an entire portfolio or could buy an entire portfolio. Where I've positioned myself, where I tell everyone that's exactly what I want. I want to buy 5, 10, 15, 20 properties at one time in portfolios. And I tell them that, and then those are the ones that come to me. My property managers as well, I tell them the same thing. If any of your clients are looking to retire and they just want someone to buy them out, I will buy their entire portfolio. And that allows them to go on to their next step in life. I now inherit this portfolio. I keep the properties that I want and I sell off the properties that I don't, because I have the time and flexibility to be able to do that. So that's what sourced most of my deals over the last couple of years.
Got it. And how do you raise? I mean, how exactly you're using capital, and also how exactly you're managing these properties?
Sure. So for what we just talked about, the capital side, that is just me and my wife and my kids. And so we don't bring on any partners for that. We don't raise funds for that. It's all self-funded. We've been doing this for almost 20 years. So we've been really good and disciplined about saving the cash flow from all of our properties every single year. And the only thing we do with that cash flow is to buy more cash flow properties. And obviously it maintains our lifestyle, but we've been growing that for the last, 20 years or so. And then as equity equity opportunities come up, values go up, and if we do sell or if we refinance, then we use that to increase our capital to buy properties. But yeah, self-funded for the primary source of funds, and then we partner that with traditional debt or investor portfolio loans and things like that.
Got it. Got it. So, are you using third-party property management or self-managed?
Yes, and so I don't manage anything. Starting out like most people, they try to be their own property manager to save a little bit of money, or maybe just not knowing how to hire people. But I was a terrible property manager. I'm still a terrible property manager, and early on realized I need to find good people, and particularly good property managers. So anytime I go into a new market, a really good investor friendly real estate agent is the first thing I look for, and a really good investor friendly property manager that understands the numbers, understands, and I approach that property manager relationship and even that real estate agent relationship more as a partnership, because I rarely go into an area with the goal of buying one property. I might buy 10, 20, 30, 50 properties in an area, because if the numbers make sense, then I'll continue to buy properties in that area, and that will help that agent scale his business. That'll help that property manager scale their business to usually a whole nother level. The only reason I do not continue to buy in an area if it becomes a bad investment for me, and if it becomes a headache. So the property manager is highly incentivized to make sure that my properties are at peak performance and I'm getting a good return, because they know that I stop buying properties in their area if they let them fall and they're not meeting my standard or my criteria.
Got it. So, what's your criteria in selecting particular neighborhood or market?
Yeah, so that shifted a lot over the last couple of years. I was very analytical to start because I was in Hawaii, and buying cash flow in Hawaii doesn't make sense, right? And so I did a few deals in Hawaii. They're more equity based, but it's so hard to cash flow in Hawaii because the prices, and goes back since the last 20 years or so, and it's even worse today. And so I had to learn how to invest remotely while living in Hawaii into other parts of the United States. And so I just looked at analytics. I looked at price to rent ratios. I looked at trends. The economy, is it growing? Is it shrinking in that area? The jobs and things like that. And all that's very important, and all that's readily available. I will say the last, I would say 5 years or so, I have shifted into markets where I live closer. Not because they're the best place to invest, they're decent places to invest. But one, I found really good teams. I was able to build really good relationships. And I mentioned I have three kids. They're at an age where I was educating them about the investment process, but it was all long distance. It was all on paper for them, and they couldn't have any hands-on experiences. So I really wanted to be able to buy properties nearby, specifically so that I can take my kids to it. So almost every single weekend, we're driving to our projects, we're meeting contractors, we're looking at properties that we're under contract for, we're looking at properties that we want to make an offer on. And although they're young, they are part of that discussion, which is very important to me. And so I am focusing heavily in this area, and people say, well, should I be investing in that area? Sure, you can make any area work with the right team, but I'm choosing it specifically for that educational component.
So, how is that experience taking your kids with you for touring,
It's
traveling,
it
all this stuff?
Yeah, it is the best thing in life. I think I'm an okay dad. I think I'm an okay dad. My wife's amazing. She fully carries the load for our family. But I'm so like driven, right? And so I love building things. And so sometimes I get caught up in my, so it, I like to say I'm an investor. That's my job. But if it wasn't my job, I'd be doing it anyways. It's my passion, right? So, and when that happens, is like when I'm at home on the weekend, I kind of want to analyze deals. When I'm on vacation, I kind of want to analyze deals and make offers. And so I'm always thinking that. And it wasn't until I realized, one, my kids were curious about what I was doing. One, I have the responsibility to teach them anyways. And then now this becomes at least one father-daughter, father-son thing that I can do with them. And I've lucked out that they all enjoy doing it. And so it is some nice one-on-one time. I usually take one of my kids with me on the weekend, sometimes two. And then we get some really good one-on-one time during the drive, but then I make sure that they are kind of taking part in something that I'm passionate about. And then separate from that, then we make sure that, we step away once a month to go do something that's not real estate investor related that they might be passionate about, and I'm going to take part in that.
Awesome, awesome. Yeah, and also like what's your take on current inflation situation? How exactly it will be impacting real estate space?
Yeah, that's a great question. I would say over the last 2 years or so, I've spoken on and talked about inflation more than anything else would be my guess. It feels like it's cooling down a little bit over the last month or so, but the story has been. So I had a training. It was called like, what would we do if inflation hit 5%? This is like 3 years ago, right? And this is this hypothetical crazy number of what if we were at 5% inflation, and I ran the numbers of what that would mean for your money in the bank, what it would be doing to eating up your money and your investment portfolio, and all those things. And then we hit 5% inflation. Then I adjusted my presentation at the beginning of the pandemic. Is like, okay, what would we do if we got to like 6.5%? Because that's crazy. And then we blew past that. So I adjusted it probably 5 times over the last 2 years alone. And my last one was what would happen if we were at 10% inflation. And I know we're not technically that level. Some people would argue we have been at that level and higher, but in terms of what's reporting, we just know our money is not worth what it was. We used to say it's not worth what it was 20 years ago. Our money is not worth what it was a year ago or 2 years ago. And so there was a very strategic reason I wanted to buy much more than we used to do last year. So we would average 5, 10, maybe 15 property purchases a year, just based on the deals that came to us. I really wanted to ramp that up and tried to get to 52 to set for a big goal. But one, I wanted to make sure I was in properties, and making sure I wasn't holding on to my money that was losing value in the bank, and position those in properties as soon as possible. So that's really what it comes down to. I think inflation has driven more people to real estate. The casual investor that maybe is diversified over a lot of things, or maybe has a bunch of liquidity in a bank or something along those lines, sees real estate as the best inflation hedge out there, especially if you're using leverage. The simple example that I use is, if two people, John and Jane, are investing $100,000 today, right? John goes, puts it into the stock market or Bitcoin or anything, right? Something along those lines. And let's say that market goes up by exactly 10%, right? John, at the end of the year, made $10,000 for simple math on his $100,000 investment. But if Jane put that in real estate, and if Jane used leverage to buy real estate and put that same $100,000 in real estate as a 25% down payment, Jane now bought $400,000 in real estate. And now let's say Jane was in a real estate market that went up by exactly 10%, just like John's, stock market, right? So for simple math, went up by 10%. However, her $100,000 didn't go up by $10,000. Her $100,000 turned into $400,000 property that went up by $40,000, right? And so now, even if we have a 5, 6, 7, 8% inflation, so let's say we're at 10% inflation, John made $10,000 but lost $10,000 of value in inflation, where Jane made $40,000, lost $10,000 of value in inflation, but made $40,000. So that's net positive of 30 above and beyond inflation. So there's no other metric, there's no other vehicle, and that's just one of the wealth triggers within real estate that you're able to use, right? And there's so many others out there, but just that alone, if we're talking apples to apples for appreciation in portfolio value, there's nothing that compares to that. And that is probably the least important part of investing in real estate. Cash flow, you got some tax advantage, you got some other things that come higher on the list, at least in my mind, in value when I buy a real estate property.
Awesome, great. Yeah, thank you. And also, you mentioned during our offline chat about the development project. So, would you share a little bit more about that project and how exactly what's your role and
Sure. Yeah, I'm so
plan?
excited about this. It's called Loudoun International. Loudoun County is the county I'm in. It's the wealthiest county in the U.S. Year in and year out, highest median income, very, very affluent area, right? A lot of government contract jobs, IT jobs. So it's going to be built in this area, which we're excited about. And there's going to be multifamily, there's going to be medical facilities, there's going to be a sports and entertainment complex and convention center. It is truly a mini city that we are developing, master plan wise. And in terms of the ownership, it is going to be part of a nonprofit ownership, which is awesome because one, we're able to give back to causes that we care about, right? Underprivileged, veterans, housing disadvantaged and things like that. So it's going to do good for the community. But equally as important, because we're running it as a nonprofit, so many doors have opened up to us in terms of fast track for zoning, highly advantaged, land acquisition terms, highly advantaged loan products only been available to nonprofits and even grant programs as well. And so the size and scale of the development we're building is made possible because we're taking that nonprofit route. However, to get started, there's investors involved. So I run the syndication to get the investors involved, not to own the nonprofit, but to fund and help fund the nonprofit. And so we put this together, that syndication. As of recording, yesterday was the first day that we started to start to present on that. And you're looking at cash flow. It's for accredited investors only. Unfortunately, we can't take money from anyone that's not accredited. But cash flow, you're looking at in year one, you're getting 23% is the estimated cash flow that you're getting. In year two, you're getting 29%. Year three, it goes up. And then it's only a 2-year commitment. So you can go up to 6 years, but a 2-year commitment, and you're looking at somewhere between a 50 and 70% average annual return over that period, 2 years or 6 years, depending on how long you stay. So it's the best investment project I've ever put together. I handcrafted those terms, and the reason we're able to pay out those level of returns to our investors is they're not getting equity in the project. They are helping to fund in the beginning. The developer is the one that's going to go take on the development, but they're not actually investing in the development. They're investing in the funding, and they're getting paid out of the loans as soon as they come in. So it's unique. I've invested in many syndications. I've been a part of many syndications in the past. This doesn't really compare to anything else. And at the end of the day, I'm excited because I can look out my window and point to like, that is a project that we are a part of, and be proud of something that is one really good, cool development to be a part of. But probably more importantly, a really cool cause that's, I think, going to benefit the community in generations to come.
Awesome, and thank you for sharing that. Would you share any of your, best real estate investing experience so far?
Yeah, so personally, I love smaller deals because the being creative on smaller deals. So like small apartment burrs, right? So whether it's a two unit, 4 unit, a 12 unit, you have that creativity, right? And you're not worrying about a bunch of partners and what everyone's doing. So I get, my wife and I, we still love the small to mid-sized multifamily. In terms of one of my favorite small to mid-sized multifamily. It's in Maryland, not too far from where I am. It was a 12-unit apartment building, somewhat run down, somewhat mismanaged, mom and pop manager, and they just got tired. They just stopped filling it up. They just because it was paid off. There's no debt. So they're making money, but they weren't keeping it up. And it got down to like 50%, occupancy, and only for the sole reason of they got tired of putting out ads and painting the apartments to turn it over. And so we were able to buy it, help them exit because they really wanted to exit, buy it at an amazing value price, $100,000, crazy value. There's probably a $350,000 value there, but based on the condition and the occupancy, they said this is what we want, and so we said perfect, we'll take it. And then just based on like cosmetic things, just painting, some basic flooring, and raising rents to market rent, we're probably up close to $750,000 in value in less than a year on that property, right? So it's a smaller scale property, but when you take a look at cash on cash return, or you look at your value in what you actually put into the deal, I'm proud of that one. That's been in the last 2 years we've been working on. And then there's many deals that don't pan out anywhere near that, right? There's deals that you think you're going to do a perfect burr, and then the appraiser comes back and says, yeah, we don't have any comps, we can't justify your value, and so now your money is stuck in that property longer than you think it's going to be. And if you have plans for that money for your next project, that kind of puts a damper on your progress there.
Right. So would you also share challenging experience?
Yeah, I think most, coming out of a pandemic, I think everyone in this space has challenging experiences they can talk to. Most of mine in recent memory are related to delays, supply chain delays. So, an example, there's in Virginia, Winchester, Virginia, a place that I love, rental properties, and do some flipping there as well when it's a property that doesn't pencil out for cash flow. And right at the beginning of the pandemic, bought a property, seemed like an easy 2 month renovation, turnaround, sell. That turned into 18 months, right? Just because everything shut down, no permitting, no office, no nothing. And it's hard to run a profitable business, right? Or profitable project at least, when your timetable, turns from 2 months to 18 months. And so that was tough. And then there's probably two or three renovation major delays that we were going through at the exact same time. So that kind of slowed us down for a bit, and so we had a year of slow growth because of that, because our capital tied up longer than expected. And then luckily, at the beginning of last year, we were able to free up a lot of that capital, get out of those, exit the equity in those projects, and that led to us having the capital to be able to push through and try to get to that one property per week in 2021.
Awesome. So yeah, any personal habits that are helping you to be successful?
So, there's two that I point to. One, I believe in big goals, and not just big goals, but an actual vision for yourself. So I think that's trying to leave a legacy and give back, and that's what led me to this nonprofit kind of venture development. But prior to that, we set aside a percentage of our doors, our cash flow doors, to be nothing but giving doors, meaning we own them, but the cash flow goes into a different account that does nothing but set aside for causes that we care about. And by doing it that way, it somewhat automates how much we're going to spend. It's not like, can we afford to spend this? It's that was set aside specifically for that. And that compounds, and we just make sure that every roughly 10 doors we are buying, we're setting aside the cash flow, and that cash flow comes in, and we're able to go commit to causes, passionate about giving to various causes that support cancer research, various support causes for veterans and housing disadvantaged and things like that. So, but the mechanism to save and set aside money is kind of what has helped us to kind of give back at a higher level than we probably would be if we just thought about it.
Got it. So any personal learning or any one decision so that impacted your life?
So I think every time, and doesn't matter what business it was, doesn't matter if it's real estate investing or the agent side. I think it's committing to teaching it. Every time I committed to saying, "Hey, I want to be able to teach other people this," I've actually been able to excel even more, and I feel we learn more as we commit to teach. Because if I'm just learning and absorbing, but I don't ever think I need to teach this to anyone, then I might absorb 10% of it or 15% of it. The moment I say, I'm going to teach this to somebody, I'm going to teach this to my group, my mentees, my offices, and things like that, then I really retain it and I become a master of that craft. One of the reasons I agreed to become a broker and run an office or become and run the syndication or write a book is it forces me to really put a structure around what I'm doing, perfect what I'm doing, and because I can't teach it until I perfect it, and so I would say put yourself in at, no matter what stage you are, to becoming a mentor or coach for someone else, right? If you bought one deal, you can still be a mentor or coach for someone that has bought no deals, right? And then as you buy 5 deals, and you might be a mentor or coach for someone that is 2 deals behind you. So, but committing to that, one, it helps the community, it helps your friends and family, but more so, it helps you really codify what you need to know, and it forces you to take your own advice that you're giving, because you can't give someone else advice and realize, oh yeah, that's right, I'm not doing that myself, I should go do that to grow my business. So commit to being a teacher.
Awesome. And how can listeners can connect with you?
I have a website. It's omnitheinvestorguy.com. On there, we put projects, the deals, and things like that. I'm fairly open on social media, Facebook, Instagram, at Omni the Investor Guy. You can find me, connect with me there. I try to respond to my messages, within a reasonable amount of time, and open to just, questions. And I love coaching. I love mentoring. It's not a business of mine, but I try to provide as much free feedback and advice when I have the time to do it.
Yeah, thank you, Amna. I really enjoyed the conversation. Thanks for sharing your experiences.
It was my pleasure. Thank you.
Sure.